Hello everyone, welcome back to my channel today. Another episode of weekly market update, and specifically we are going to look at what is the comparison between the sold price and the list price. What is going on with the supply right now? That we have been seeing that for the last 4 days, the active listing on the market has going up. So what is the driving? What is the driving of that information? And lastly, we are going to look at all the home price, all the average sold price for the last year to see what is the change that we see so far. All right, so let's take a look at what we have. Thank you everyone for coming back to my channel. Again, we are going to look at another episode of Monday Market Update. And first of all, we're gonna share with you information about the average percentage of the sale price compared to the list price. All right, so let's look at some number. This actually a very good number to show which market is actually the hottest right now. Right? That is one of the favorite number that we can see. And again, all of this information are gathering by the Comfort Associates, which is a very reliable real estate data company in Arizona. And we're looking at the top 5 cities that has the percentage of the sold price of the sale price compared to the list price. Okay, everything of course you see that also have a higher percentage, more than 100% percentage, meaning that the sale price is greater than the list price. At top number 1, Cave Creek is the number 1 city at 103.52. Compared to 2 years ago, it is actually only 98%. 98%, right? 2 years ago is about the same time that we have everything about crazy about COVID, right? March of 2020 is everything is started. And then at number 2, Chandler is 103.32 right now at this time. 2 years ago, it's actually at 99.3. So it's actually, when you compare to Cave Creek, right, Chandler is actually a little bit lower because 2 years ago, Chandler is higher than Cave Creek, but now, Cave Creek already passed Chandler. But it's still at the number 2, right? At number 3, El Mirage. Number 4, Gilbert and Anthem, right? As you see here, Cave Creek and Cave Creek and Anthem is kind of in the north Phoenix area. Chandler and Gilbert is kind of in the east. And surprise, El Mirage is actually on the west, right? Well, the fact that El Mirage is on the west is not a surprise, but I'm surprised that Glendale and Avondale and Goodyear is not on the list of the top 5. It doesn't mean that when I look at the detail, the data more, actually Avondale is number 6 on the list. So it's not really far away, and it's still higher than 100%. But what I'm saying is that the top 5 is actually these 5 markets right here. We can see that these are the hottest markets in Arizona at this time. All right. The next data that we're gonna show, we're gonna spend a lot of time to talk about this number right here because it's actually a very interesting data. As you see here, and then this is also gathering from the Comfort Associates as well. And you see that this is the year-over-year percent change in supply. All right, now that the chart that I put together here is actually only for the property that's less than 3,000 square feet. Okay, and as you see here, 21.8% increase, right? 21.8% increase compared to the previous year. So this is actually from a year ago, right? If you're looking at, again, this is actually only for 300,000 square feet or less. Obviously, now we ask why. Why is that happening? Because if we're looking at above 3,000, right, it's actually go down. The supply is actually go down 11%. And if we're looking at further, more than 5,000, right, it's actually go down 43% compared to previous year. So why? Why is the 3,000 square feet homes or less, 3,000 square feet home or less has the supply increased? One of the explanation is that because of the interest rate go higher. Now, most of the less than 3,000 square feet home is for the first-time home buyer, is for the buyer that the buyer has the first time that it's more affordable home, but for a lot of people, right, less than 3,000 is more affordable to a lot of people. Now, when the interest rate increase, a lot of people in that market, they no longer qualify, right? That's number one. They no longer qualify because they don't have as much income as people who can buy 4,000, 5,000, or 6,000 square feet home, right? They simply don't have enough income to cover the mortgage. Therefore, the demand drop. Number two reason is that not only they not qualify, but some people, they don't want to buy. They don't want to buy at the high interest rates, right? So they also drop out of the market, right? Since the demand drop for the high interest rate for those market, supply gonna remaining, right? Because if not a lot of people buying houses in that area, in that square footage range, the supply gonna be remaining on the market. Now, I'm not saying that we go into the buyer market or anything like that. Because one thing we have to recognize that there's no actually, if we forget about the demand, the number of active new listing coming onto the market is actually less, right? It's actually less than last year. We are talking about the remaining listings, right? So the listing has to stay on the market for a little bit longer amount of time, all right? And then therefore, that's number 21.8% here. Okay. Now, if you're looking at the overall, if you look at every square footage as a whole, right, 13.4%. 13.4% is the average of all the size. That's actually the highest number for several years, right? So it's actually the highest year over year for several years. So we do actually see that right now, and the demand is gonna thing. But it's not. We're still gonna be in the bidding war, by the way, right? Obviously, it's not gonna be as hot, as intense as before, as last year, but it's still going to be in the bidding war, because if it is a really cool house, if it is a really cool price, people are still going to fight for it. The remaining group of buyers are going to still fight for it if it is a nice and it is a right price. Okay. The last chart that we're actually looking at is, this is the average sold price, and the blue bar is actually from March of 2022, which is 517,774. February last month is 507. Now, one notice that this is almost $10,000 increase for 1 month. Okay, almost $10,000 in it for 1 month. Now, but wait, if you do March of 2021, that is 413. So that's almost more than $100,000 increase. If you're looking at March of 2020, that 353 is actually $150,000 increase. Okay, so if those of you, unfortunately, for those of you, are actually $164,000 since March of 2020 until now, which is an increase of 47%. Of 47%. That number is actually, by the way, 164 is actually more than the average income of Phoenix, Arizona. The average income that the regular family can earn for 1 year. Okay, so if someone, the reason why I bring up the March is that this is also, by the way, gathering from the Comfort Associates. The reason why we're looking at March is that March 2020 is a year that COVID starts and everything's changed because of COVID, right? So we want to compare. Had you wait to buy the house that time, how much you have lost. Okay, if you bought the house in March 2020, now you could have earned about $164,000 in the home value. Right now, why is this much better? Because if you can work, right, if you work, if you save, the income that you earn could be $164,000 as well if you have a really good income. But then you have to pay tax, you have to pay insurance, you have to pay a lot of things from that money. for the home value, you don't have to pay anything of that, right? You don't have to pay any tax. You don't have any medical for that, right? That's the reason why a lot of people thinking about selling the house right now, because they earn a lot of money from 2020 already if they bought a house around that time. Again, 47% of increase, which is great. Okay, yeah. So, but we have to agree that if the home price get higher like that, a lot of people gonna be not gonna be willing to pay. In addition to the high interest rate, right? So they're not willing to pay for that, right? For that high price and the high interest rate. Okay, so they're gonna withdraw from the markets. Therefore, the demand gonna drop down. So the only demand on the market right now is, I mean, most of the percentage of the remaining active buyers on the market right now is the investors, right? Because they're available cash, they don't care about the interest rate, right? So they're willing to make that happening, right? But however, though, we already see the stats that because investor, right, they're gonna try to rent the house back to the market. So we already see some stats that the rental market is actually slowing down, and it's actually going to the Dow trend, right? It was 169 yesterday per square feet, $1.69 per square feet. It was actually 1.98 compared to last year. Okay, that is on average. So we're gonna follow that trend very carefully, because if the rental keep going down, probably the demand from the investor also drop, right? So if both demands, one is from the residents to live in a house and one is from the investor, if both drop, we can see that the market's gonna change. So we're gonna follow that very closely for you, and I'm gonna report to you right away if we see something significant change. Right now, that is just a prediction. It will happening for sure. This will happening. Okay. All right. Thank you so much, everyone. And if you do have any questions regarding to any of the topic that I share with you today, feel free to give me a call. My number right there, 602-515-2442. Thank you. Bye-bye.